Hello everyone and welcome to Options Paycheck Live. Today I'm streaming live again and I will review my portfolio. I will show you trades from the past week and I will show you also what trades I plan for the upcoming week. The results from this week, from last week, you can see I collected premium of $647. Overall, I collected $6,231 since April 2025, and annual return on investment from premiums is 34% and a half. Going to the trades from the last week, and I will go again to the detail in the Google Sheet, but high level, I was trading Tesla, Nvidia, Gamestop, and Cleveland Cliffs. The most profitable was Gamestop, but I sold covered calls on Tesla for $66. I sold puts on Nvidia. It wasn't very profitable. It was only for $5.60. But for GameStop, I had calls and puts open, and overall I collected $574, and I collected also a little from Cleveland Cliffs, 48 cents. Overall, my portfolio performance is nice. My portfolio grew 2% and 2.11% last week, and overall the performance since April is 33%. So as you can see, I'm outperforming S&P 500 and as well Nasdaq. So if you look at my portfolio allocation, not much has changed since last week. So actually this is outdated. So this is really as of this week. So for Tesla, I have over 100 shares, right? So the value is $33,000. For GameStop, similar position with 1,400 shares, and then little positions in Nvidia, Cleveland Cliffs, ClearSign Technologies, and Google. And I have quite significant position in cash. So almost 1/3 of my positions is in cash right now, which means I'll be selling puts, but also I will be selling covered calls and on Tesla, and I'll be selling covered calls on GameStop as well. So let's go to Google Sheet and review the trades from the past week. As you can see here, the details, and I think what was interesting was GameStop, because I was selling puts and I was also rolling the puts actually, right? So I sold at the beginning of week. I sold Nvidia and GameStop puts, and they were for strike prices where there was no chance actually that they get assigned, and so I decided in the middle of week, as the price was growing and wasn't really going in the direction of puts. You can see it here on the chart, right? So the price was actually growing up last week, and so my puts were somewhere down here at with the strike price of $18. So I decided I will close all my put positions. So I closed actually the put positions on Nvidia, and therefore I made really very small profit on Nvidia, but I opened new put position on GameStop, right? So closed this one with the $18 and reopened with the $23. It was 13 puts. Overall, I collected 200 on this new put in the middle of the week. So this was quick adjustment of trades based on the development of the markets. Now let's go and have a look on the positions and the trades I want to do this week. So we can go, stay login. We can go to Interactive Brokers. Here I have my positions, so you can see it's basically the same positions as I was showing on the dashboard before, and I will go to the trades, and you will see that I have there two trades as of now, covered calls for Tesla and covered calls for GameStop. Let's go to the details of Tesla covered calls. So I have here calls for 365. Let me just go to the Google Sheet again, and I have here the details. So I'm planning cash covered calls for 365. It's one covered calls contract, and the premium is $1.11. So overall, I would be collecting $111 for next week, which is annualized return. If I'm collecting this premium every week, right, I would be getting 17% from these trades. Let's go to the details. Let's go to the chart, and I will show you why I'm actually deciding for strike price of $365. Again, Tesla right now is in the consolidation phase. It can be, it can go more or less both directions, right? Either there might be some news, and it might be positive or negative. We all know that robotaxi is starting in Austin, and so yeah, so there might be some hype around this, but then also any other news actually could happen. But overall, I am putting my strike price, which means that if the price of the stock actually grows significantly over my strike price, I will be forced to sell my shares, which is something that I don't want to do. But then at least I would be getting significant upside from $321 where we are right now. Anyway, so I'm putting the strike price here at 365, and I will be looking at the price. I will be monitoring what the price is doing. If it's growing too much, then I can roll the position and potentially roll it up and forward, so to the next week, so that I would be not losing the shares. However, there is this resistance right at the level of 365, more or less, or even 362, right, somewhere here around this level. So there is a chance it will not break through, right? Also, such resistance, it might be, yeah, if there is a volume or news, right, it might actually push through, but I think for now it's relatively safe actually to keep the strike price at this level. Also, I was checking, so always, right, I was checking the option contracts, so we can have a look how does it look, right? If there is significant volume of open interest. So actually, there is quite some open interest, 500,000 or yeah, almost 600,000 contracts. So then we will need to go to the details and see what are the strike prices. And you can see there is a lot of puts. So someone, I mean, I don't know why they are there, right? But they should not drive the price up. If I zoom in, there is there are quite some strikes at or calls at 330, and then for calls we are looking at the green bars, right? So then 340, and then there is a drop and less for 350, and then even less for 360. But again, always in between there is drop, and this should not really drive the price significantly up. Then there is quite a few actually in between 365 and 370, but again, I don't expect that this would be driving the price too much high, and max pain is around 320 22. So we will see. It might be that the Tesla will be still in the consolidation phase and will keep going to the side. If not, we are positioned with 365 quite well for not being assigned, but get some premium that is reasonable, right? For this stage of the market, 17% annualized return. All right, so it would be this. The the buffer between opening or closing price on Friday and the strike price is 12%, plus considering technical analysis. I think it's reasonable strike price. Then the next, I was opening covered calls also for Gamestop. Here I have 14 contracts, and I open a strike with the strike price of $26.50 and 15 cents as a premium. So let's put it here, right? So it's 14 contracts, 15 cents as a premium, and you can see I'll be collecting $210, which is annualized return 35%, which is very nice. It is what I was saying with the GameStop before, right? That's nice premium, and I actually will show you here what I did as a comparison. So I compared again call options with the more or less the same delta, and you can see that GameStop is getting closer with the return from premiums to Tesla. It's still a little bit higher than Tesla, but it's getting to the same zone more or less, and so it was good actually that the last 2 weeks I could collect a lot of premium from when the prices of premium were inflated high. All right, so yeah, for next week 2650, and we can go to the chart again. I keep the strike price somewhere here, right? 2650. It is the same strike price as I had originally. Of course, the price did not did not go to these levels. There might be this channel, right? How the price is moving. If it's still moving around the bottom part on Friday, we will be far away from 26 and a half. If we are moving more towards the upper level, we will be actually at this level, right? 26.50. Again, there is this resistance below, right? So previous support is now resistance. So the price will probably stop here for a bit and will be testing whether it can go through the resistance or not. So therefore, I have this level 26 and a half, and I believe I will collect just the premium without much of the risk of assignment. Again, I'll be monitoring the news. I was checking the open interest as well, and when you look at it, there is not really much of open option contracts that would drive the price towards 26.5 or higher, because there is this gap between 27 20 $25 and then 27. And so even though there is some open interest on the level of $27, it should not drive the price too much high. And maybe we can check also Max Payne. Yeah, again, right? So Max Payne is $24. It's more or less moving to the side. So yeah, again, we will see, but it is level where, from technical analysis perspective, it's quite safe. From the delta perspective, it's also quite far away. Delta is 0.12, and yeah, and the premium is still quite nice. So the next one, what I was considering, and what I still need to plan, I need to look at how I allocate my cash, and I'm considering actually three options, right? So or three scenarios. One is that I will sell puts for Nvidia. It's still not breaking the resistance, right? So there's this resistance. It's moving around, and but the RSI is going down. Actually, the price is moving to the side, but I expect that the price might actually drop, and if it starts dropping, then it will be probably either somewhere here to the level of 136, but more likely it might drop towards 130, and maybe even 123, but within 1 week the drop might not be so significant. So I was thinking about 130 as a strike price for the puts, but as you can see here, the strike price for 130 or the premium for 130 strike price is 21 cents. So I would be getting, for one contract or two contracts, I would be getting $48. It is annualized return of 8%. And so then I was considering also Gamestop and several strike levels, and then Tesla with the strike price of 280. So let's have a look on Tesla. So here, again, we discussed this already, right? But it can be that the price will be retesting again this support level, or will be retesting 275, 280 level, and therefore I would be putting my strike price somewhere here around 280, and then if I do so, then the premium would be 92 cents, which means that I would be getting $92 from the contract. I have cash only for one contract, so it would be $92. Potentially I could do a higher strike price. So maybe let's have a look. What does it mean if I do a higher strike price? If I do 290, then the premium would be 164. So 290, 164. So the premium would be actually higher, and or would be of course higher. But what is delta? 14113. So if I just do the calculation, then we would be somewhere here, and it's maybe even better than Gamestop from this perspective, right? Because delta is even lower. So puts for 290 are quite good candidate, and I would allocate, so for this I would need to allocate $29,000, which means I would still have like $30,000 to allocate to GameStop, which would be for one contract only. Nevertheless, I could consider this. And so what other options I have, right? Or what other scenarios I can play. So one scenario is that I will go to the puts for GameStop with the strike price $21.50. $21.50 is somewhere here, and I mean potentially the price could be dropping, of course. The resistance is somewhere here, right? So it might be touching the price again, and then potentially, well, either falling even more or just going up. I don't think that's maybe the best way how to play this. I would be playing it maybe a little bit more aggressive, and so then 22 or $23 are next levels actually to look at, right? And so let's try actually with this yellow line. So the next level would be $22, which is somewhere here, and I would be lowering my purchase price. Also, I don't expect necessarily too volatile or drastic moves in any direction. So $22 might be good strike price. Let's have a look on the premium. So I have the premium captured here. So it's 18 cents. If I take 1,400 shares, so it's $252 for 43% annualized return. So that's actually pretty decent. From here, I would be getting 164. What do you think, guys? What is better investment? And considering risks and considering return, I think they are both quite similar, right? So then I will actually go for GameStop with strike price of $22 and will be getting 43% annualized return. So let's do it this way. I will do puts for 22. It will be, I think, 14. Stop options. I can do 14. I think 15 would be too much, right? 15 is probably too much, so I do 14. And I will collect $255. So 18 cents as a price for one contract, and sell orders. Accept. Right, good. So then I have this, I have sold this, and so therefore, if all trades will open exactly as I planned, then I will be getting $573 as a premium, 573. Again, when I take my original capital that I invested and calculate annualized return on investment, it would be 38%. So this is above what I am targeting for, and I would be overall after 13 weeks I would be on a collected premium of $6,800, which is again overall annualized return 34%, which is very nice. And yeah, so let's just review that all trades are there. Yeah, so puts for GameStop, covered calls for Tesla, covered calls for GameStop, and like this I can close the call, and I will be back during the week. If there is something interesting happening on the market, I will review my trades, and I will share what I'm doing to maximize my profits. Thank you very much, and have a nice day.